Hi, my name is Ifan, and I'm currently a junior and a rising senior in Atla East Stevenson High School in Illinois. So today my topic is going to be on Citigroup, and as of March 27, 2024, the trading price is 61.7. So today I'm going to go over company overview, investment thesis, industry and company analysis, financials evaluations, and also management, governance, and ESG considerations. So what is Citigroup? Citigroup is an American multinational investment bank and financial service corporation headquartered in New York. So the company mainly operates in two divisions, institutional clients group and personal banking and wealth management. In 2023, the company had around 239,000 of employees, earning a global revenue totaling to 78.5 billion. In terms of sell by geographic location, there is trading floor in 77 countries, and half of the sale take place in the United States. Market position. Citigroup is ranked 36 on the Fortune 500 and recognized as the leading company in the digital banking industry for 22 consecutive years. Additionally, it's also the second largest issuer of credit card. For shareholding, institutional investors hold 71.61% of Citigroup's share, while Citigroup's insider makes up 4.4% and retail investor making up 23.99%. The top three institutional investors are Vanguard, BlackRock, and State Street. So I rate Citigroup as a buy with a target price of 78.92. These are based on the white mode analysis, the market position, the ESG and AI consideration, but also knowing the unpleasing financials and the reason behind it. So I'm going to talk more in details later. So what industry or market does Citigroup operate in? So definitely the commercial banking market. It has a market size that's 226.44 billion in 2024, and it's also expected to grow at a compound annual growth rate greater than 2% during the forecast period from 2024 to 2029 due to an increase in digitalization and open banking. So the four major players are JP Morgan Chase, Bank of America, Wells Fargo, and Citigroup. JP Morgan is the leading company with around like 20% share, while Citibank has like 10%. So these four companies had already accounted for half of the whole entire market. Additionally, in the credit card industry, credit cards market size in terms of transaction value is already 14.31 trillion, and it's expected to grow at a compound annual growth rate of 3.67 during the forecast period. So the biggest two issuers of credit cards are JP Morgan Chase and Visa, JP Morgan Chase and Citigroup. So which Visa card having the highest and consistent percentage of 50 to 55%, and MasterCard having a percentage of 20 to 25. So these two already accounted for 80% of the whole entire market share. For mode analysis, I rate it as a white mode because of the intangible assets and threat recognition, the network effect, and the efficient skill. So with a strong reputation and long-standing presence in the industry, Citigroup definitely had like expanded its consumer bases and definitely holds great potential to grow in the future. Citigroup also has extensive network of global customers with international presence in more than 160 countries, with on-the-ground presence in 95 and trading floors in 77, serving more than 200 million customers. So with all that, Citigroup definitely had operated at like a significant scale efficiency. Therefore, like for companies that want to like enter in the market, it's especially hard to like start off with like a cost-efficient manner. I rate the intensity of competitive rivalry significant, bargaining power of customers insignificant, bargaining power of suppliers moderate, and threat of substitutes moderate, and the threat of new entrants as insignificant. So what are the growth strategies for Citigroup? So Citigroup have definitely taken massive effort to manage the speeds and volumes of the digital age while helping clients and customers address the challenges of an ever-evolving world. And recently, Citigroup just had launched the Citi Direct, which is a digital platform designed to meet the needs of its commercial banking clients. Citigroup's digital platform had incorporated 90 markets in 194 foreign currencies to showcase global connectedness and sustain global influence. So, with all that, additionally, Citigroup focuses a lot on their customers, and because they have a diverse customer base, they offer 20 more languages for their customers to choose from. And all of their services are simple and intuitive. So as I mentioned before, Citigroup's financials definitely weren't really pleasing. And just from looking at the chart, the profitability in 2023, it's 78.5, which is like a 4.15 increase from 2022. But because of the recent 1.8 billion charge, due to the reorganization in government insurance fund, Citigroup only reported a net income of 9.2 billion. And in 2023, compared to a net income of 14.8 billion the year before. But for growth, Citigroup's dividend and book value had experienced consistent growth over the past few years. Citigroup's average dividends per share growth rate was 2%, and average book value growth rate was 4.9% over the past 12 months. So for valuation, I didn't use the discounted cash flow model, and I instead used the dividend discount model. So I think the discounted cash flow model, like the value's net present value of free cash flow to equity using the firm's equity cost of capital. But when evaluating a bank, there are other measures to account for more than simply an NPV. Therefore, I choose to use dividend discount model. And for management, as I said earlier, the top 3 institutional shareholders are Vanguard, BlackRock, and State Street. The board of directors consists of 13 members, 87 of who declared as independent. Citigroup also has a long history of deficiencies in compliance, risk management, and data governance and internal controls. And recently, the Federal Reserve Board just sent 3 notices to Citigroup to make urgent changes on the way it measures default risk and data integrity. So because Citigroup is in the financial sector, the performance tends to have strong correlation with the global economy because 60% of its revenue is derived from consumer loans and business lending. It also has cybersecurity risks, which many customers believe it might, changing to digital platform might have cyber attacks and data breaches. And although Citigroup had been the leader of global banks in digital banking, the rise of financial technology had increased the market's efficiency while lowering the cost, causing the industry to be increasingly competitive. For the AI, I definitely see more opportunities to create a decentralized, secure, and transparent system for recording and verifying transactions or data. But also in the meantime, the use of AI in banking has raised several ethical and legal concerns, such as privacy issues and algorithmic bias, decision-making, and discriminatory outcomes. So recently, Citigroup, as I said earlier, Citigroup reported a 1.8 billion loss. And another recent news is that Citigroup is defending itself against a lawsuit that alleges workplace harassment in New York. Citigroup is a high performer in terms of ESG rating in the industry. It has an ESG rating in the 94th percentile, so that definitely says a lot. Environmental, it's working on low carbon transition. Climate, it's also reducing climate risk, and it's working towards sustainable operation. For social, it's in supply chain and lending activities, Citigroup tends to uphold and support the protection of human rights. It also attains a Citigroup impact fund of $500 million in investing in companies to address social challenges. The Governance and Public Affairs Committee that has direct oversight over sustainability issues, such as and other potential material ESG issues, and a newly established council to provide. And ESG is a newly established council to provide senior management level oversight. And there's definitely diversity and inclusion in every single of these job levels. And thanks for listening.